All right. Well, thank you for this opportunity. I'll do my best to be as on time as we can so that we can get to some questions. This is our disclaimer. Being a publicly traded company, there could be forward-looking statements as we have these conversations, et cetera. Please refer to this when you get a chance to look at the presentation again in the future. Just a little bit about Encore. We're focused on being the next premier uranium production company in the United States. We're focusing on in situ recovery as being our primary production source of uranium deposits, starting in Texas and then also eventually over a period of time exploiting our properties in New Mexico using in situ technology. We're real proud of our team, our technical team that we put together. We have some of the most experienced folks in the U.S. uranium industry, and with that focus on in situ recovery. Now we'll get to a little bit more on those folks, our team, in a short bit. We see an improving uranium market. We see principally due to significant changes in the supply-demand picture. Since 2017, uranium demand has gone up by 17%, with more reactors on now than there were prior to the Fukushima Daiichi nuclear incident. And even though Japan is mostly still shut down, we have reactors being shut down. More reactors are operating today than there were prior to that time. And also there's more reactors under construction at this moment than there were 10 years ago. So it's a sign of increasing demand, but also we're seeing a reduction in supply as more and more mines have been shut down, either through just pure depletion or through as a result of the current pricing. We see less supply coming on. In fact, since 2017, global supply is down by 24%. So one can easily see the disconnect. And what's filling that gap right now is principally secondary supplies and inventories, both of which are finite. And we see that in the next couple of years as being the catalyst for supporting new production. One of the things we did this year, or actually at the end of 2020, is we accomplished what we consider to be a transformational acquisition, and that is the acquisition of the 2 licensed processing facilities down in Texas. And those are key because they're obviously in situ recovery, but also they represent 2 of the 11 licensed in situ recovery facilities in the country. And so that's critical. And we think that's a game changer for us. Plus, we've also effectively doubled our size of our resources and holdings in New Mexico, and we've got leverage into new production opportunities in Texas. A little bit about the company. A lot of changes, as John mentioned earlier. Our current market capitalization as of yesterday was $212 million Canadian. We have 193 million shares outstanding. Another 19.9 million warrants out. Our fully diluted count is 224 million shares. Now, we're in the process of completing a private placement, which we originally targeted to have 8 million shares, $8 million Canadian raised at a target level of $1 a share with a half warrant, and we've been able to supersize that to $15 million total, which was pretty exciting with the demand that we saw. It shows the investor confidence in the uranium space. And we believe it shows investor confidence in our ability to execute on our strategy. Our management team, I think one of the highlights of our management team is we have Bill Sheriff, who is our executive chairman. Bill's one of our key points of our strategy, and Bill's fond to talk about it, is that we're looking at, in addition to just getting into production and meeting the market demands and exploiting our properties, we also look at growing the company potentially through mergers and acquisitions. And Bill has quite a bit of experience with that, as his history has been with his prior time with Energy Metals. On the technical side and operational side, we have Dennis Stover, who's been in the industry. He's an industry veteran, and he's had a lot of experience in situ recovery. In fact, he's one of the original patent holders of some of the in situ recovery technology that was in play early in the process that made it commercial. And we have people like Richard Cherry and Mark Palizza and others on our team that round it out. Here's our technical team. We've also added to that, this team that's not reflected here. We have a new CFO, which we announced, announced a couple weeks ago, who's got a lot of industry experience in uranium and as well as operational experience. And we also have a top-line Texas exploration geologist who joined us as well, who's, that we look forward to using his talents to propel us into production. This is a summary of kind of what we have now. We're focusing on the short term, on the immediately on getting ready to get into production. We have 2 licensed in situ recovery facilities in Texas. We have current mineral leases with historic uranium resources on those. We also have the dominant position in New Mexico with over 300,000 acres and significant both 43-101 resources as well as significant historic resources. We have other properties, some breccia pipes in Arizona, as well as our interest in Group 11 technologies. I'm going to focus on Texas for the moment, and that's kind of where my heart started. That's where I started my career. With the acquisition, we acquired 2 production facilities. That's the Rosita processing facility located in the center, more to the center left of the map, and then Kingsville Dome, which is located to the southeast. Those are 2 operating facilities, and I actually started my career at these sites. I started at Kingsville Dome in 1987 through the construction and startup and operating of that facility, and the same thing with Rosita in 1992. And both of these have had very successful operating lives and production histories. Kingsville recently was upgraded to a central processing plant to operate satellite facilities back in 2006. And Rosita had the same investment back in 2008. The other properties we have on the map, Vasquez, which is located to the southwest, that actually is a depleted ore body that's coming on board. We're in the process of finalizing the cleanup on that, and we expect to have it fully released and off the books by the end of this year, or at least applied to get off the books with the state of Texas. And then we have Butler Ranch to the north, which is an exciting project, has significant historic resources and a historic uranium production area. So we see the upside there, and we also have a significant amount of information, and we're in the process of acquiring other properties with known resources to feed this. And the reason why we get excited about Texas is because it not only has it had a historic production history, it's got a lot of upside. As you can see down below, the USGS has estimated that there's a potential to discover another 220 million pounds of resources in that area that could be produced at cost, reasonable and competitive cost. And also, Texas being an agreement state, all the decisions are local. They're all made in Texas. There's very little federal influence, so it has a very well-defined regulatory environment. A little bit more granular on our new production facilities, our new old ones, but we consider them new and exciting. We have Kingsville Dome and Rosita. Both of those facilities have a nameplate capacity of 800,000 pounds per year. To clarify that 800,000 pounds is per site is limited by their drying capacity, which is what we need to package uranium. The processing side can have significantly higher capacities. And in fact, the way these plants are configured, they can easily have additional drying capacity bolted on. I like to call it modular. Obviously, it's always a little bit more technical than that. But but they can actually be added to, and conceptually, if we wanted to, we could actually move the drying capacity from Kingsville to Rosita for the short term as we look to provide our initial production capacity at Rosita. And while we're focusing on Rosita, it's actually the one that has the shortest timeline to be production capable. The investment that was done back in 2008 by the previous owner has been maintained. It wasn't fully completed before the uranium markets disappeared on them. Also, it's in much better shape at this moment, but we're retaining the option to bring Kingsville on at a later time as a potential supplemental production facility. Those things will be as we go through our planning and economic analysis, particularly as we identify new ore bodies, et cetera. We'll have a better handle on how we're going to plan and operate one or both of these facilities. And they're all designed to act as satellite central processing plants. So much in the same vein as they do, has been historically done up in Wyoming. These sites are ideal for this. And the beauty of it with this acquisition is that we also got a trained workforce. So there's the ability to expand that workforce, but we have people to be able to train them, not just so we can actually make this happen faster and more safely and efficiently. One of the beauties of Texas is that there's a whole lot of unknown that we know about. In addition to the resources we obtained with this acquisition, both at the remaining resources at Rosita, as well as at Butler Ranch, there's other opportunities. We've just acquired a significant database of a former uranium company that had actually licensed facilities and never operated them. So and they've done most of that work is very recent as 2017. So we have a high confidence in it, and we're actually beginning to exploit that. One of the things that Texas brings that you don't see, say, up in the Athabasca, et cetera, is that the geology is quite a bit different. It's a very young sedimentary deposit and you can see from that lower picture with just the cuttings out of one drill hole with changes in colors. It shows that there's a very active geochemical boundary, and as a result, there's two things that are difficult to do. One is to have consistent ability to capture cores, to do assays, and the other is the fact that with this high activity of geochemistry, uranium and radium, which we use as a proxy in our well logging, is not in equilibrium. So we can't just use radium to estimate the uranium content. We have to have a physical content because uranium measurement. And by using what's called prompt fission neutron, we actually have a downhole wireline system to get real-time in situ uranium assays. It's pretty granular on it, but it uses neutrons to actually excite the uranium in the ore body and allows us to get a better estimate of what the uranium content grade is, and allows us to do better resource and as well as wellfield planning. A little bit about we'll go on to New Mexico. We see New Mexico as our future. There's going to be a lot of work we have to do in New Mexico. If anybody's followed the story in New Mexico, one knows that there's a history of production. I believe that over 500 million pounds of uranium was produced in New Mexico, and they expect another 550 million pounds to be available. It's economic at reasonable prices out there, and as a result, we see that as an opportunity. But we're going to have to do some extra homework. New Mexico is not a slam dunk. There's the legacy of the historic uranium mining that go way back even to the Manhattan Project. And a lot of it happened near on the tribal lands, and so we believe we know we're going to have to do some work. There's models for it to execute where we can look at potential tribal private public opportunities that allow us to provide some opportunity for the tribe and the workers in the tribe to actually at least have some opportunity to to participate in the opportunity there, rather than just just saying we're bringing a bunch of jobs and doing some local public works, et cetera. And it's a long-term investment. The Navajo Nation's already doing that with other opportunities through various tribal corporations, and there's a good model for that as well up in Saskatchewan with respect to Cameco and how they are working with the First Nations. We see that as a good model to apply in New Mexico. So we see New Mexico in the 5 to 10 year window. We're focusing, even though we have significant conventional properties, which we see are very valuable. We're going to focus on in situ recovery because that's what we know. The reason why we're focusing as a company on in situ recovery is because the capital expenditures are relatively low compared to a conventional mine. The licensing and permitting is very well defined, and when we're done, we don't have significant excavations, nor do we have significant tailings impoundments as a result. In fact, when an in situ recovery facility is completed, there's almost no surface impacts left, and the groundwater as well has to be cleaned up to meet background standards. So we see that as something we know how to do. I've done it in my career, and our technical team have a lot of experience at doing that. So we know how to build that into our planning, and so we can execute. And like I said, we see New Mexico as our future. And you can see from the picture, we control a significant portion of the ground there. We have significant resources, and I'll keep flipping here. This is our historic resources as well as our 43-101 resources. And as you can see, they're relatively significant. Some of the more project detail, Crown Butte, Hosta Butte actually Crown Point is actually partially licensed already, and under the Laramide Resources license. So there's an opportunity there. Once they decide to start moving forward, we'll have an opportunity to work with them on that. We also have significant conventional property named Juan Tafoya, and the interesting part of this, Juan Tafoya came from the Westwater acquisition. We already had the Marquez, and literally these two projects are one project separated by a fence. So we're right now we're in the process of updating the technical report for this project combined, and hope to have that released soon once it's done. We've got other projects such as Nose Rock, West Largo, Ambrosia Lake Tree Line, which is in the Grants Mineral District. And finally, what I like to call our secret sauce, our data. We have significant databases, and one of our philosophies is we don't believe we have to go out and do any greenfield exploration. We believe that there's already enough known uranium deposits in the country based on that other companies have already done back in the 70s and 80s. We had a lot of oil and gas companies and large mining companies going out and exploring for new uranium deposits and identifying them. It's just a matter of taking the information, putting it together into a strategy, and then acquiring the properties and putting it into production. We believe that we've got a leg up on that, simply because we have such a broad database that brings it all together. And we just added to that recently with this acquisition of additional data that I mentioned earlier. So we see this as an opportunity to expand our reach beyond what we already, and also to strengthen our production profile going forward. As I mentioned, our goal is to become the premier ISR uranium production company in the U.S. We have significant resources. We believe our strength is in our team, and as well as in New Mexico, opportunity gives us a long-term growth plan. One of the other things we see as an opportunity as well as potentials for consolidation in the uranium industry. As I mentioned, there were 11 licensed facilities. We control 2 of those now. When we talk about in situ recovery, we do believe that by consolidation brings strength, but also it brings cost savings and cost efficiency. when we look at competing on a global level with larger corporations, we believe there's strength in numbers, and those numbers we see can be effectively done through industry consolidation, and we intend to keep looking into that going forward, and that's part of our growth plan as well. And that's the presentation. And John, if you got any questions, I'll be glad to answer them.
Okay, thanks, Paul. Can you hear me okay still?
Yes.
Okay. All right, we'll start off. We do have a few questions that have come in. And again, if you haven't asked your question yet, throw it in the Q&A now. So first question, any estimates on what kind of uranium contracting price you would need to secure prior to bringing these facilities online to produce? Any estimate on your all-in sustaining cost at the Texas facilities?
Sure. Well, first of all, I got to caveat this that we have not done a PEA on the preliminary economic analysis on the Texas properties yet. We've had them for less than a couple of months. So, but we've got a lot of experience in operating down there. We believe we can be competitive, not at today's spot prices, but we can be competitive with better, with about 50% of the world's production. There's a good indicator Trade Tech publishes every month, which is called the production cost indicator, and that is published at around $43.30 per pound average production cost to incentivize new production. We believe, based on my experience of working in Texas and knowing these ore bodies, et cetera, I believe that our all-in sustaining costs will be somewhere less than that published average cost. And with respect to sales price, obviously we would love to get as high a price as we can so we can bring as much return to our shareholders as we are able to. But we believe that we can be competitive with the likes of, when you listen to our competitors such as Cameco, et cetera, they talk about pricing need to be in the high 40s for some of to do new contracting, and even in the mid 50s for incentivizing restarting locations like McArthur River. I believe that their contracting levels, what they're saying they need for contracting, at least to assign new contracts, those would be some of the ranges that we would see. We're going to be competitive for, and do the best we can to do better than that. I know that was kind of a roundabout way to get there, but without having established a PEA, it's hard to pinpoint numbers.
I guess a follow-up question to that, timeline on a PEA, are you planning on doing that this year?
Yes. We have some of the properties we picked up already have some good data. We're going to do one of the things we're doing with this private placement we did, some of the funds are going to go to drilling to upgrade the resource estimates from historic to 43101 compliant resources. And with that, we intend to do a PEA as well to bolster our planning.
Okay. So mineral resource estimates in 2021 PEA, maybe early 2022. Does that sound about right?
Well, I think we can probably do them together, do them in one report.
Okay. Question from Barry Allen, analyst at Laurentian Bank Securities. He's just asking for any estimates for time to cash flow.
Well, obviously we're going to wait on market's going to drive a lot of that. We see the market improving enough into the 2022, late 2022, 2020, early 2023 that will incentivize us to go into production. I expect that if the market indicators act as we expect, we would be generating cash starting in 2023, probably second quarter.
Okay. What do you see coming out of the new Biden administration that will support your strategy? Is there anything from the new administration that you think will negatively impact your plans? And if so, how do you mitigate those impacts?
Well, we see a lot of, first of all, on the positive side, from the Biden administration with their clean air agenda, they're focusing on obviously carbon reduction. but truly it's a clean air objective. And we see nuclear, as they've stated in their policy positions, that nuclear is a key part of it. And as long as we can keep nuclear power plants operating, we have a customer base to keep us in business. We see that there's a desire within the Biden administration to have even though, one would say it's almost like it was from the previous administration, to have a domestic supply chain to support those plans. We believe that the uranium mining has to be part of that to make it happen. You need uranium for nuclear energy, and if one looks at the rest of the world, there's not a whole bunch more material coming into the market at this time, so we see an opportunity for the domestic side. There's always challenges with the new administration coming in. My expectation going forward with respect to the Biden administration is that we expect to see some of the policies coming out with respect to that we saw in the Obama administration. We're already starting to see some of that with respect to some of the executive orders. Our intent, obviously, if without becoming a stakeholder in those processes, the uranium industry is relatively small, and without becoming a stakeholder in this process, it's hard to let the administration know what their impacts are. So we intend, we're working with some trade associations we're working with to get insight into the Biden administration as well as into the halls of Congress virtually these days to assure that the uranium story remains viable, and that effectively they do no harm going forward. We're supportive of their clean energy targets. And we believe that we can, the U.S. has, in my opinion, and that's all it is, has the best jurisdiction to do uranium mining. We have the most stringent rules. The requirements for environmental and health protection are some of the strongest. Canada's up there, Australia's up there as well. We believe we can do it better than elsewhere, a lot of the other places in the world here. And that's the message we're going to take to the administration, is that, we've got to communicate to them that we can do it better than what was done in the past, and stay ahead of some of the people who would like to tar or paint the industry with what happened in the past, which is well beyond us now.
Okay. A question here, you might have already answered it. New Mexico is economic at reasonable prices. Can you elaborate more on what reasonable prices would be for these assets? I think they're referring to a statement you made during your presentation.
Yeah. Well, when I talk about reasonable prices, our expectation is that prices will be obviously significantly higher than what they are today. So as far as getting to a hard, fast number, I would say that we got some more homework to do on our side to provide that to the public through additional work on the 4301s we're working on. I would say that we would have to have prices that are higher than what better than 50% the percentile of the world production. So we're talking probably in the high 50s, maybe 60s. To make it incentivized. Now, that's assuming it's conventional mining. We've got to do some work on the in situ side. I have not evaluated any of that at the moment, but I believe that I know we can be competitive. I'm familiar with the New Mexico in situ recoveries operation or plant, pilot plants and all that stuff from my days when I worked for Uranium Resources back in the 80s and 90s. I believe we can be competitive, but to give you a specific number or even a range, it's going to be a little tough right now. Premature.
Question on the plan use of proceeds from the recent private placement. So I think you touched on some aspects, but yep. So just for $8 million, you had originally gone to market for $8 million. You've upsized that to almost double at 15. So yeah, what the plan for the original $8 million and the extra 7 that you'd be taking?
Sure. So the original plan with the $8 million was there were several things we were going to be doing. One is we're going to execute on our work at Rosita to bring it into production capable. We believe we can do that for less than $1 million and do that within a year. And also we need to maintain our existing facility at Kingsville Dome. So there's costs associated with that. There's some reclamation work that wasn't completed by the end of the transaction that we need to finish. And those have a benefit to us because once that work is done, we will be able to start releasing some of the properties that are currently held and reduce our holding cost as well as reduce bonding costs. That we see that as directly impacting the bottom line once it's executed. The other is we intend to do some drilling. I mentioned about firming up resources for 43-101 reports, and also we want to start exploiting some resources that I mentioned about that we've identified through our data acquisitions to bring those into our production visibility. And so we'll have to do some drilling there, also some lease acquisitions, et cetera. And also, I mentioned we also are working on some M&A activities. It always strengthens your hand when you're doing M&A activities to have that the financial support, and so we see that as an important key to supporting that M&A as we work to grow the company.
Okay. And a sign of strength, obviously, as well, the fact that your share price is holding above the financing price, like 15% above, even with the upsize, another sign of strength. Were you going to say something, Paul?
No, go ahead.
Okay, sorry. I was just going to ask a quick follow-up to that question. So what, for the activities directed on exploration, like the drilling, the PEA and resource definition, what do you have a rough number of how many million would be allocated to that side of things?
Not yet. We were looking at a much more modest program prior to the financing. We're not going to go out and spend it like crazy, but we certainly want to be. It gives us more opportunities to do more. We were looking at a very limited program that was going to be probably less than $1 million, but now with this gives us more leverage to go and pick up to develop some properties that actually have a faster timeline to production. In my opinion, that could leverage Rosita to be ready to go much sooner than I hope. That much sooner than otherwise. If we didn't do this work, pardon me for getting. Yeah.
There's a few questions here around the macro side of things. Do you feel that we're in an uranium bubble? Is now the time to be investing in uranium? You want to speak to that at all?
Sure. So I kind of put things in my own career historic perspective, and so in 2003. I was actually 2004. I was approached to get back move from a large company where I was doing principally reclamation work and getting ready to get into the copper business to go re-enter the back end of the uranium industry. And I saw some of the same things I'm seeing today. And one is that there's a disconnect between supply and demand, and so and also the fact is that repeatedly we see the fact that there's depletion of these inventories that have currently been sustaining the nuclear fleets. These inventories are getting shorter. Utilities are in their perspective, are looking more and more like at effectively just-in-time inventories, increasing their risk levels on their fuel supply. So we see them getting closer and closer to having demands. And in fact, that's been confirmed by conversations I've been having with utilities, that the window when they have openings for new need for supply is getting closer to 2021. In other words, it's 1 to 2 years out when they look to start trying to fill those gaps than it would have been if I would have been looking at it a few years ago, where they had like 4 or 5 years before they had anything coming open. So we're seeing more opportunities. And also the fact is that demand's not going to go down; it's going to increase. But we're not seeing there's no new projects coming online right now. So fundamentally, there's becoming a greater and greater disconnect between supply and demand, and the supply needs, which are currently filled by principally secondary supplies, those are going away, and they're depleting because we don't have an infinite amount of material floating in the churn, so to speak. And so I see that, from our perspective, and it's opinion only, is that we see this happening sooner, and we believe it's sustainable. And so when I try to relate back to my 2004 timeline, when we talk about, is this a bubble or is it sustainable? Based on my experience, everything's, from the market sense and everything else, I believe it's sustainable. I don't believe we're going to see the spikes that we saw back in 2006 and 2007, which were driven by some very, very tight constraints that were short-lived. I believe this is going to be sustainable. The one thing we want to do is make sure the utilities, our principal customers, feel that they got some security, not only in supply but also in cost. We can't forget the fact that they need to be cost competitive with other sources of generation, and so we can't just basically we want to be competitive. We want them to be competitive, so it'll be sustainable going forward. And I believe that's the case.
Okay. So on this topic, Paul, I did ask someone, another uranium company CEO recently, whether they thought the run this time would be bigger than the run last time. I mean, there are some factors present today that weren't present last time, but it sounds like you think it will be, it's going to be a strong run, but not kind of that same really violent spike that we got in the mid 2000s.
That's what I see. I think it's just the whole picture is different. The last spike run up occurred as a result of we had the nuclear renaissance, so there was already a desire, expectation was going to be future demand, but that was still on the horizon, hadn't really hit the ground yet. And then on top of that, you had the supply interruptions first prompted by the fire at Olympic Dam in 2003 and 2004, and then the inflows at McArthur River, and then ultimately the big one, which was the inflow at Cigar Lake. But those weren't long term; they were short term impacts. The difference today is that a lot of the production destruction isn't as a result of instantaneous production disruptions. It's really a factor, like, for example, we have significant production in Australia going offline because of depletion. The same thing occurring in Africa. And even in Kazakhstan, if you go and read through the material they put out, they see that their current production levels are not sustainable in the long run, and as a result, there's an expectation that there's going to be supply is going to be running out. The difference between today and in the past is the other thing is that Kazakhstan hadn't been a factor, and it became a ramp up factor after the market really took off. We also had a black swan event, which is the Fukushima incident that created just basically a collapse in confidence in nuclear power. But we can see even today in the headlines of the Wall Street Journal had an editorial today talking about the Texas situation, which I got to experience firsthand, where even though the Texas reactor fleet, which consists of 4 reactors, lost 1 reactor to a cold weather issue, they still had 75% of their capacity operating when the demand was needed. And all 3 of those reactors that were remaining operating ran at 100% capacity. It showed the need for baseload energy, and the fact is that there's constraints on gas to be able to deploy. So it really bolsters the argument that nuclear is necessary going forward. And I'm hoping that that's something that's seen by the Biden administration, and we can get real good support at the federal level. And that's what I'll see. I see as building the narrative, that not only narrative, but building the case that nuclear is here to stay, and it's going to be a continuous demand for our material. And that's why I see this as being sustainable.
Okay. I was actually going to ask you that question, what you thought the impact of Texas could have on the whole nuclear debate. So I think you've kind of answered that already. I think I agree with you. There's going to be more eyes on nuclear because of it.
Yep.
Yeah. Any idea? I'm not seeing any other questions, so I'm just going to throw out some of my own because we do have a little bit more time. Any idea on how you're going to structure your contracts with utilities? Are you looking to do sort of the same structure that Cameco does? Would you be looking to sell a certain percentage of your production into the spot market? Can you give us any color on that?
Well, we're going to take everything depends on ultimately where we're at that time. The intent, my plan is that it would be great to get some base load contracts or base price contracts, fixed price contracts going forward. That could help underpin the cash flow for future production or the production at that point. And obviously, we want some exposure to the market. Obviously, we want to be able to get some ability to see higher prices. So in the past, I've always, when I worked for prior companies, we've always focused on having less than half of our production, or about half of our production, or maybe up to 60% of our production under contracts, and the balance either exposed through an offtake agreement that is all in the spot market or just directly into the spot, in order to ensure there's upside. But also, there's another factor why I do that is that if there's any interruptions or issues with being able to deliver, we want to have the capacity to be able to deliver those base contracts, so we can assure that there's cash flow coming in, and that way that we're mitigating production risk, but also we're mitigating any price risk that it's out there going forward.
Okay. There was a question around, I think it's kind of getting to it looks like it was deleted, but it's one that does come up, and it's around the subject of waste from the nuclear industry. I think that is, if my opinion, certainly one of the impediments that's still sort of, it's a hard one to get around for the industry when you're trying to convince somebody to be pro-nuclear. Thoughts on that?
Well, first of all, the nuclear waste issue in the United States, I'm going to focus on the United States because other countries seem to have figured it out. In the United States, it's really political. It's not a technical issue. It's not a technical concern. There's ways to build repositories that can be safe and protective of the environment for the long period of time. And so that's one of the issues that gets brought up a lot, and it always becomes a quote unquote impediment for building new reactors. We have to get to a solution for that. And there's been a blue ribbon panel put together in the United States to come up and solve that solution. But that blue ribbon panel has been in existence for over 10 years, and I don't think they've delivered a product yet. And that's concerning. In reality, what we have is probably 100 or 50 different nuclear storage locations right now at each of the reactor facilities. And that creates a challenge. That's where the challenge is, that it's safer to put it in one place than have it spread around over the country. We got to get beyond that. I do believe that the nuclear waste issue is it's more political. I remember a comparison, of course, it's probably changed since then, is that, back when I started in this industry, I'm going to say probably let's go back 20 years ago, all the nuclear waste that came off of the reactors would fit on a football field up to the 50-yard line, 5 feet high. It's a pretty small footprint when you compare just waste coming off other streams. Now that number is probably filled up a full football field by this time. But it's still a manageable quantity if we can just agree to where it goes. And I think that'll get solved sometime. I hope sooner than later.
Okay. One new question just came in. Just a second here. Encore. Okay, just give me. Sorry about this. So Encore share price has had a great run in the past 6 months, and the market cap has grown significantly given Encore's business model. And in a $70 per pound uranium price environment, full production scenario, what would be a reasonable market cap for the company?
Okay, this is where I kind of wish Bill Sheriff was on the call with me. He's better at that than I am. I would say we would have, and of course, I have to be careful about, the forward-looking statements and all that stuff. But I think that we would have we certainly would be well above where we're at today going forward. I think that the getting into production at $70 per pound market would be generating cash. And I think that would provide us opportunities for growth, supporting our growth scenario. And obviously with that, you would see the market cap would have to expand to accommodate that going forward. I don't have a good gauge on how that looks today. There's probably people who are much better at that than I am.
All right. A question from my doppelganger here, also from a John Smith, not me. Are you looking at Wyoming to expand the company's projects?
Well, yeah. Just so everybody understands, I spent quite a bit of, significant part of my career in Wyoming. And so I have as much as I have a fondness for Texas, where I grew up and was my home, I have a strong affinity for Wyoming. I love the open spaces. I love the government environment there, the regulatory environment. In fact, I spent a lot of my political capital actually creating an environment in Wyoming to where it's an agreement state, where before the federal government had quite a bit of oversight over what was going on. And I was able to work with the Wyoming legislature as well, the governor and the various agencies to make that happen. And it proved to be very beneficial for the Wyoming industry. So my intention is to, at some point, get back into Wyoming. We currently have properties in Wyoming as we stand. Obviously, they're exploration properties at the moment, but I see opportunities there either through potential mergers and acquisitions or other ways to, acquisitions of property, projects, et cetera. But Wyoming is a great environment to work. And I've got a lot of experience, and honestly, a lot of my industry colleagues are up there too. So I have a strong affinity for that. Yeah. So Wyoming is in the future.
Okay. It's also a beautiful place to live too, from what I understand.
In places.
Yeah.
If you're in everybody thinks Wyoming looks like Jackson, and most of Wyoming is prairie.
Okay.
And that's the good part, okay, because it keeps all the people from wanting to live there. So you can have a population of 500,000 people in the entire state and drive for miles without seeing anybody. And some people don't like that. It's not so bad from my perspective. Yeah.
Well, Paul, I don't see any other questions. I think that was a great presentation. Wanted to thank you again for participating in the conference and being a feature company.
Sure.
Congrats, obviously, on the share price. Like I said, you're up 3 times from when we had you on last. Clearly, like I said as well, based on the market demand for your financing, there's a lot of people that have confidence in the company. So it's got to make you feel good as well. And the information on the screen here, if people are looking for more info, then just use the investor relations contact is where you direct them.
Yes, please.
Okay. All right. So with that, we'll conclude this session. There will be, as there always is, a survey at the end. So we do ask you, if you don't mind, filling that out. If you want management at Encore Energy to contact you for a follow-up discussion, if you answer yes to the, do you want management to contact you question, we will pass that information on and they'll arrange to get in touch with you. Otherwise, you will be taken directly to our next presentation, which will be in about 8 minutes. So we'll see everybody there in 8 minutes. And thanks again, Paul. Stay safe. Hope everything is okay for you in Texas.
Thank you. And thank you for this opportunity. And thanks everybody for listening.